All right. So, friends, good morning, everyone. Good morning. To online, offline, everybody, very good. Yes. So, friends, listen. Yesterday, we were discussing PGBP, right? We just started PGBP. We completed 3 sections 28, 30, and 31. And today, we have a heavyweight to start with, that is depreciation, section 32. It's actually heavyweight. Why I'm saving heavyweight? Because we have a lot of things to discuss under PGBP and we will discuss one by one together. All right. So, let's understand what exactly is the concept of depreciation. First of all, you tell me, what do you mean by depreciation? What do you mean by depreciation? Depreciation simply means if you are capitalizing the expenditure. Say, for example, all the capital nature expenditure you have to capitalize. Then a small portion of that expenditure is claimed as a deduction under section 32. 32. This is what you normally do. So you have to capitalize all the capital nature expenditure. Then a small portion of that percentage of that expenditure is allowed as a deduction. Now the one thing that you have to be very careful is when you compute depreciation in income tax, the method of computation is totally different from your accounting methodology. Only the name is similar. The computation is entirely different. Are you all with me? First of all, there are two methods for computing depreciation in income tax law. Number one, SLM. Number two, WDV. SLM means straight line method. And number two, WDV. WDV means written down value method. Right now, we are only focusing on the written down value method because SLM is actually applicable only for power generators and distributors. That too optional. That means in India, if you are a power generator or a distributor, you may opt for SLM. Are you all with me? You may opt for SLM. You may means what? At your choice, you may opt for SLM. There is nobody mandating you to opt for SLM. It's up to you. Your choice, you may opt for SLM basis. Now, for all other person, WDV is mandatory. So we are actually sticking only on to the WDV method, and let's understand how to compute depreciation on WDV method. So first of all, the one thing that you should understand is in WDV method, you have to create a block. In WDV method, whenever you compute a depreciation, you have to first compute a block, or we can say create a block. Create a block. What do you mean by block? Block simply means all the assets that is under same category, same rate have to be grouped together and you have to charge depreciation on that group value. Are you with me? Are you with me? So assets under same block or same category with similar rates have to be put together to create a block. And on this block value, you charge depreciation. This is what is the concept of depreciation. Now you should understand how many category of assets we have in income tax. Tell me, which all are the categories we have in income tax? Any idea? How many categories of assets we have in income tax? How many categories of assets we have? We can say 4 or 5. Both are right. Okay. If we say 5, then it is number 1, it should be building. Building. Number 2, it is plant and machinery. Number 3, furniture and fittings. Number 4, intangibles. And number 5 we can say as ships. Alright, if you check the schedule, we can categorize the categories of assets into 5. But normally we say 4 as well, by considering ship as a part of the plant and machinery. That is also fine. Are you with me? So we can say either 4 by considering ship as a part of the plant and machinery, or we can say 5. So if you check the actual depreciation schedule, it is actually 5 because they have provided ship as a separate item. Okay, so we can say 5 categories of assets are there. Number 1, building. Number 2, plant and machinery. Number 3, furniture and fittings. And number 4, intangible assets. And number 5, ships. Say for example, the normal rate of depreciation for building is 10%. The normal rate of depreciation for building is how much, friends? It is at 10%. Now imagine, say I have 3 buildings. Say building 1, building 2 and building 3. Imagine a case where I have 3 buildings, say building 1, building 2, building 3. Today I started my new business. I started my new business with 3 buildings. Building number 1 having a value of 2 lakhs. Building number 2 having a value of 8 lakhs. Building number 3 having a value of 10 lakhs. Say it is like this. So in a block, when it comes to the income tax, how do you charge depreciation? Depreciation is not charged on the individual values of asset. It is not charged on the individual values of asset. Rather, you have to create a block. Now you tell me how to create a block. Assets under same category with similar rates have to be put together to create a block. So how many categories of assets we have? We have only 1 category of assets, that is said to be building. And how many buildings we have under the same category? 3 buildings. So you have to add these 3 together and you need to create a block, and the block value will be 20 lakhs. On this 20 lakh you have to charge depreciation. This is called as what concept? Block concept. Are you with me? So after 5 or 6 years, whenever there is a new addition, you have to add that respective value to the block. They'll again charge the depreciation on that entire block value. After 15 or 12 or after 5 or 6 years, you won't be able to know what exactly is the individual value of a single asset. That you don't have to. Are you with me? That is the greatest advantage when it comes to the income tax law, because everything is charged on the block value. So to start with, let's understand which all are the categories and what all are the important rates of depreciation that you have to study. Certain rates you have to by heart, because in certain questions, they are not giving the rate that you should know. So I'm about to discuss a few rate of depreciation which are actually very important, and you have to remember these rates. So we can start with the rate of depreciation. Can you read the heading? Rate of depreciation. Important ones only. This is not the complete rate chart. We have provided only the important items here. And what is item number 1? Residential building. And under which category it is coming? Under the category building. Say for example, KS Academy. For KS Academy, this building is not a residential building, because this building is where the classes are conducted. Say they have a guest house. KS Academy have a faculty guest house. For KS Academy, that faculty guest house is actually what? A residential building which is used for the business. Are you with me? That residential building is not for the purpose of stay of directors of KS Academy. It is actually for the faculties and the other officials. Whoever comes on official purpose can stay in that particular residential house. So, if a business is having a residential building, then the rate of depreciation shall be how much, friends? Can you tell me how much is the rate of depreciation? It is 5%. Now, moving on to the second one, temporary structure. What is temporary structure? Whenever you visit a construction site, you can see small sheds. Have you seen small sheds in front of the construction site? Those small sheds are normally called as what? Temporary structure. And what is the rate of depreciation for that small structure? 40%. The rate of depreciation for that small structure is how much? 40%. So, moving on to the other building. Other building means for KS Academy, this building will come under the other building, because this is not temporary structure, this is not a residential building. For other building, what is the rate of depreciation? 10%. So, tell me friends, these three are under the same category. Which category? Building. And we have three rates under building. Which are the three rates? 5, 40 and 10. So whatever assets that comes under one category with same rates. Say KS Academy have 2 residential building and 3 commercial building. What to do? 3 commercial building, 1 block. 2 residential building, another block. Because residential building rate is 5 and commercial building the rate is 10. Are you all with me? Superb. Moving on with the next item, that is furniture and fittings. That itself is a category. Furniture and fittings. And can you tell me what is the rate? 10%. Furniture and fittings. You know what is furniture? What is fittings? What do you mean by fittings? What is fittings? Say for example, the fan, light point, switch, sockets, windows, etc. are normally called as what? Fittings. This false ceiling, etc. are normally called as what? Fittings. AC is not a fitting. Even though it is fitted in the building, AC is not a fitting, it is a plant and machinery. Okay. Fans, lights, etc. are fittings. Are you with me? Because when income tax department drafted this, AC was not a necessity. Okay, AC was not a basic thing. It was considered as a luxurious thing at that time. So those buildings at that time having AC was very less. Right now, I think in Chennai and all, if you sit in a building, that to a multi-story building, especially on the top floor, it will be like a micro oven. Okay, you can make omelets and bullseyes without turning on your stove. It's like that. That much hot it is. So right now, even though every building have an AC, it is considered as a plant and machinery only, not as a part of fitting. Yeah. Moving on, friends. Moving on. Yes. Decrease in intrinsic value of an asset owing to wear and tear. Lapse of time. Excellent. That is depreciation. Yes. So moving on, friends. So furniture and fittings. The rate of depreciation will be how much, friends? Hello, I want you to respond. What is the rate of depreciation for furniture and fittings? The rate of depreciation shall be at 10%. Moving on with the next item. What is the next item? It's under the category plant and machinery, motor car. If you have a motor car for the purpose of your business, then what is the rate of depreciation? 15%. Next one, motor vehicle running on hire. What do you mean by motor vehicle running on hire? I'm running a rent-a-car business. For me, that motor vehicle is running on hire. Are you with me? I am a goods transporter. For me, that lorry is also a motor vehicle. Okay, that lorry or the bus, whatever it is, that is renting on hire or running on hire. For that case, I can claim a depreciation of 30%. So for KS Academy, if they use a car for the official purpose, the rate will be 15%. If KS Academy is a rent-a-car business, then for the same car, they can claim depreciation at 30%. Now, moving to the next item under the category plant and machinery, that is computer, including computer software. So friends, whatever the computer, laptop, etc. that you are using, the rate of depreciation will be 40%. And plant and machinery general rate is how much? 15%. Then pollution control equipment also comes under the category of plant and machinery and the rate is 40%. Windmill comes under the category of plant and machinery and the rate is again 40%. Books comes under the plant and machinery category and the rate is 40%. What is books? Books. Say for example, for a chartered accountant, taxman books or the accounting standard related books or the company law related books. For an advocate, Bharatiya Nyaya Samhita books. That is a new law. We don't have IPC anymore. Bharatiya Nyaya Samhita is the new law. They have replaced IPC. Indian Penal Code have been replaced with Bharatiya Nyaya Samhita. And civil laws have been replaced with Bharatiya Nagrik Samhita, if I'm not wrong. Bharatiya Nagrik Samhita is the new law for IPC and the other civil laws. So they have replaced everything and new laws is there. So new books will be there. You are buying new books. That book is your asset. Under which category? Plant and machinery. What is the rate? 40%. Are you all with me? Whether the book is an annual publication or not, the rate will be 40%. What is annual publication? Income tax book is an annual publication because every year what will happen? There will be a change. Every financial year, there will be a change. And yes, the income tax books are normally considered as an annual publication. And what is the rate? 40%. Now, if you have intangible assets, what are the intangible assets? Know-how, patent, copyright, trademark, licenses, franchises, or any other business or commercial right of similar nature, not being goodwill of a business or a profession. What do you mean by this? Not being goodwill of a business or a profession. For goodwill, you cannot claim any depreciation. Depreciation is not eligible on goodwill. That's what the department says. Are you all with me? Are you all with me? You can't change, you can't claim depreciation on goodwill. Why? Because according to the department, goodwill is a self-generated asset. That too, it never depreciates due to the normal business. It only appreciates if you do good business. If you do bad business, it will automatically went off. That is not on account of your normal business. Whether you give quality goods, appreciate. Bad goods, depreciate. So goodwill during the normal course of your business never comes down. So don't charge any depreciation on goodwill, whether it is purchased or whether it is self-generated. Are you all with me? Come again? No, not possible. For goodwill, you cannot claim anything. No expenses for goodwill. You cannot amortize, you cannot depreciate, nothing. In income tax. Amortization and depreciation, nothing is available for goodwill, okay? Goodwill, you cannot amortize it in income tax law. Yeah. Moving on to the last item. What is the last item, friends? Ships. Category, ship it is. Okay. And what is the rate? Hare, what is the rate? 20%. So the rates provided in this table, you have to mandatorily study. Are you with me? Now, friends, there is a note under this. How about mobile phone and EPA-BX? What is EPA-BX? You know what is mobile phone, right? What is EPA-BX? Telecommunication devices, just like walkies, or have you seen these phones where you connect, you click on 3, you will get the next department. So intercoms or walkies is called as EPA-BX, telecommunication devices. Mobile phones and telecommunication devices are considered as a normal plant and machinery, and the rate of depreciation will be at what rate? 15%. Mobile phone and telecommunication devices are considered as a normal plant and machinery only, and the rate of depreciation that you can charge is only 15%. Now, note it over. How about UPS and printers, scanners, etc.? UPS, printers, scanners, etc. is considered as what? Computer, and the rate of depreciation will be 40%. Are you all with me? Okay, others are making noise. Okay, don't worry. I'll mute everyone. Yeah, I've muted everyone. Don't worry. Okay, I've muted everyone. Don't worry. Okay, yeah. So the point is, listen, for the UPS, printers, scanners, etc., it is regarded as what? Computer only, and the rate of depreciation will be how much, friends? Tell me, how much is the rate of depreciation? 40%. Because UPS, printers, scanners does not have a isolated or independent existence. It is regarded as a part of your computer only, and the rate of depreciation will be 40%. That's what the department says. So moving on. So these are the category of assets that you should know. And friends, you tell me, how do you create a block? First, you find out an asset, individual asset, and you check under which category it is coming. If the asset is from same category with the same rate, why? In plant and machinery, we have 2 rates or multiple rates. 15 is there, 40 is there. Then all the assets that are coming under 40, you can categorize it into one block for the purpose of examination. Are you with me? Are you with me? All the assets that are under one category with the same rate have to be considered as part of one block. Then you have to compute depreciation on that particular block. Is that clear till now? Is that clear till now? Now you should know certain other important facts in relation to depreciation. Can you read this? In accountancy, we will compare with accountancy and income tax. Okay. In accountancy, tell me, how do you claim depreciation in accountancy? How do you claim depreciation in accountancy? Tell me, how do you claim depreciation in accountancy? Individual asset you will take, and the depreciation computation is based on the number of days of use. If an asset is used for 10 days, you will charge 10 days proportionate depreciation on that asset. Are you with me? If an asset is used for the entire 365 days, then you will claim full depreciation. In income tax, it is not like that. And in accountancy, there is one more specialty is there. If you are selling an asset in between, say for example, you are selling an asset after 2 months of usage, then you can claim depreciation up to the date of sale in accountancy. Yes or no? In income tax, these kinds of things are not there. Income tax, these kinds of things are not there. What depreciation in income tax says is, if you want to claim depreciation on a particular asset, please listen, if you want to claim depreciation on a particular asset, you must use that asset for the entire year and the asset should be with you. You are not supposed to sell it. It should be with you till the last day of that particular year. Are you with me? If you are selling an asset in between, the seller cannot claim depreciation for that asset for that year. So if you are selling an asset in between a year, you cannot claim depreciation. The asset should be there. You should keep the asset with you to claim depreciation in income tax. Is that clear? Is that clear? So in between, if you are selling an asset, you cannot charge any depreciation. Point number 2. In income tax, depreciation computation is either full or half. There is a concept called either full or half. What is this either full or half? See, what Act says is, if you are using an asset, you can charge depreciation in full. If you are using an asset in a year without selling it, you can charge depreciation in full, subjected to one exception. What is that exception? In the year of purchase, if an asset is put to use for less than 180 days, listen, in the year of, repeat with me, in the year of purchase, if an asset is put to use for less than 180 days, then you can claim a depreciation of up to how much? Only 50%. If in the year of purchase you are put to use an asset for less than 180 days, then you can charge depreciation only up to 50%. In other case, you can charge depreciation in full. I've used an asset for 190 days in the year of purchase. I can claim full depreciation. Are you with me? What if in the subsequent year, I've used an asset only for 1 day? What is the percentage of depreciation? Full. In the year of purchase, if an asset is put to use for less than 180, it is half. In future, even if you use that asset is there in your office, but you are not using it, don't worry, you can still claim depreciation. Even if you have used it for 1 or 2 days, no problem. The point is, if an asset in the year of purchase, you are put to use that particular asset for less than 180 days, then only this half will come into the picture. Otherwise, it is full. Is that point clear? So can you read this note? This is the note regarding that. If in the year of acquisition, an asset is only used for less than 180 days, depreciation shall be allowed at 50% of the allowable rate. In other cases, it shall be full rate. I hope it is clear. Mute others, I have already muted. More than or equal to, less than 180 means exactly 180 full, or more than 180 full. Yes. Less than 180 means exact 180 full depreciation. More than 180 also full depreciation. If it is 179, half. I hope it is clear. And again, one point is there. It is not the purchase date. It's all about the date of put to use. Are you with me? Are you with me? So, only used. So, it means put to use. Now, friends, there is another thing. Have you seen fire extinguishers in the buildings? Have you seen fire extinguishers in the building? Are every business persons using that fire extinguishers every year? Are they using that particular fire extinguishers every year? No. Passive use is also fine. Active use is not mandatory. Passive use is also fine. What is passive use? Whenever there is a fire, we will use that extinguisher. Okay. That extinguisher is actually kept ready for usage. that is considered as put to use only. If some asset is kept ready for usage, that is regarded as an actual put to use only. You have to install it, make it ready. Whether you are actually turning it on or not is not a concern. Are you all with me? Are you all with me? So, usage, we can say active as well as passive usage. Plant and machinery. Fire extinguisher is categorized under plant and machinery only. Okay, yes. Yeah, it's around October 4. Yes. Yeah, moving on with the next thing, friends. So this is what I've told you. You have two methods of depreciation. Number one, SLM, and number two, WDV. We are focusing only on the WDV because that is where they test questions in examination, because SLM can be claimed only for whom? Only for power generators. If we don't use machinery in subsequent year, even one itself, what is that? I didn't get it. Subsequent year, even one itself can be claimed full year depreciation. 1 day maybe. Yes. In the year of purchase, less than 180 only, half will come. All in other cases, you can claim full. Yeah, 5th October or 4th October, no problem. Moving on to the next point. So this is the format for computing depreciation. Okay, this is the format for computing depreciation. This is actually a very simple format. So I think everybody knows this format. You always start with read this WDV of the block at the beginning of the previous year. Hello, read and revise WDV of the block at the beginning of the previous year. Are you all here? Are you all here? You all want to clear in September examinations, right? This is actually July 24th. How many number of days you have for examination? How many number of days you have for your exams? Around 45, 44, 45 days. 49. We can say something near to 50. Are you with me? Something near to 50. How many subjects you have? 6 subjects. So 6 into 10 is 60. So you don't even have 10 days for a subject. Are you with me? So this is the high time. You have to gear up. I want all of you to repeat and be energetic. Don't say we are tired, because our target is somehow clear the September examination. Are you with me? From today, if you decide to clear, definitely you have time to clear. But if you are sitting in a comfort zone, okay, you do the revision, okay. For me, revision is not required. You do. Let me check. If you are in that attitude, you will sit like that. Okay, so you want to clear, you have to be with me. From the day one I was saying, I need your time. That commitment is required from you. Are you all with me? Are you all with me? Excellent. So read this along with me. When you read, you will understand and you will learn it from the class itself. You don't have to spend much time at your home. You learn everything from the class itself. So that's why I'm making you to repeat. Anyways, I'm reading. Whether you repeat or not, that doesn't make any difference for me, but that will make a huge difference for you. That's why I'm telling you to repeat. So read this along with me. WDV of the block at the beginning of the previous year. That is the first thing that you have to note down. Then, always consider additions first. Are you with me? Add assets falling within the block acquired during the previous year. Always consider additions irrespective of the date of addition. Then you add both the opening as well as addition. Are you with me? You add both the opening as well as addition. Then what to do? Less sale proceeds of assets sold during the previous year. Sale proceeds, then whatever sales you have to delete. Then you have to compute the written down value. That is the net value. That is opening plus addition minus sales. You will get the net value. Less you have to charge depreciation on this particular net value, and you will get the closing WDV. This closing WDV will be the opening WDV for the next year. Are you all with me? Are you all with me? Now, friends, there is an important thing. Okay, say for example, I'll create an example and you have to tell me the answer. Okay, say for example, our relevant PY is 2324. Our relevant PY is 2324. On April 15th, 2023, I sold some asset. I sold some asset. Thereafter, in July, I purchased some assets. Thereafter, in July, I purchased some assets. You tell me, with the opening value, first you have to delete sales or add additions. Add additions. Irrespective of the date, always first consider addition. Then only you are supposed to deduct the sales. It is a fixed format. It is not based on the date chronology and all. Always add additions first. From that, you only consider the deletions. Is that clear till now? Is that clear till now? So I'll give you a small exercise question to make it more clear. So can you solve this Q2? It is not there in your question sheet. It is actually very simple and your study material question, very simple question. So just go through this question, create a block, charge depreciation and compute the closing WDV. I want all of you to create block. Then charge the depreciation and compute the closing WDV. Do it quickly. So shall we do it together? All right, so I'm getting different answers. Very good, very good. Good participation from online friends. Excellent. Even though you have to type everything, you're doing a very good job, okay? Yes, excellent, very good, very good. Keep up the spirit. Because online friends, they have to type everything, okay? They are giving me very detailed answer. Okay, excellent, very good. Yeah, so tell me, a newly qualified chartered accountant, Mr. Dawal, commenced practice and has acquired the following assets in his office for the financial year 23-24 at a cost shown against each item. Calculate the amount of depreciation that can be claimed from his professional income for assessment year 24-25. Assume that all the assets were purchased by way of account paycheck. There are 1, 2, 3, 4, 5, 6. 6 assets are there. So our first duty is to what? Categorize them into different blocks. So which is the first asset? Computer, including computer software. You tell me which is the category? Plant and machinery, depreciable at 40%. So we will write computer. And you tell me what is the amount? 35,000, and it is purchased on 1st October. So we can say more than 180 days. More than 180 days, more than or equal to 180 days. And hence full depreciation you will get. Yes or no? So 35,000, it's a new business, so we don't have any opening value. Okay. So 35,000 rupees is the amount. Now, how about the next one? In this case, paid in cash, all are disallowed. Yes, yes, yes. Because you cannot add that as a part of your actual cost if you make the payment in cash. Yes, it is there. Moving on to the next one, which is the second asset that we have. That is UPS. UPS is also considered as computer. And what is the amount? 8,500. You tell me when is the date of put to use? You tell me whether date of purchase or date of put to use. Which one you have to consider? Date of put to use is on 8th October 23. So it is less than 180 days, and hence it is half the rate of depreciation. So while writing 8,500, I am notating that it is less than 180. Then next one, printer. Printer is also considered as computer. So you tell me what is the rate of depreciation for computer? 40% plant and machinery. Put to use is on 1st October, more than 180 days. The value is 12,500. Next asset is books. Books, you can also again consider it as plant and machinery. According to the original income tax schedule, book is a separate category. But when you compute it for the examination, because our ICA, whenever they give an official answer, they consider like this. Plant and machinery, same rate under one category. Are you with me? If you go check the original income tax schedule, book is a separate category. Even though it is under plant and machinery, rate is 40. They consider it as a separate plant and machinery. But don't worry, when you do answers in exam, you treat it as a part of the plant and machinery depreciable at 40. So book, what is the rate? 13,000, but they are saying something in the bracket. They are saying other than annual publication, 12,000. So annual publication, 1,000. What to do? Nothing. Don't do anything, because whether it is annual or not annual, you can claim depreciation at 40% for the entire value. Doesn't matter. Now you tell me more than 180, less than 180. More than 180, it is 1st April 23. Now next is office furniture. Furniture and fittings. Is it from the speaker? Okay. Furniture and fittings. And how much is the rate of depreciation for furniture and fittings? 10%. And you tell me how much is the value? Furniture and fittings, the value is 3 lakhs. More than 180. Then laptop. Again, laptop. What is the value? 43,000. And can you tell me whether it is more than 180 or less than 180? It's on 8th October. That means less than 180 days. So less than 180 days. Now, can you help me with the totals? How much is the total in the first category? 1,12,000 is the total in the first category, and we will claim depreciation. How do you claim depreciation? All those assets which is purchased and put to use for more than 180, you have to select first. That is 12,500 plus 13,000. This is subjected to what rate? Into 40%. And all those assets, that is 8,500 plus 43,000, all these two assets, which is less than 180, is subjected to 20% rate. And can you help me with the total depreciation that you can charge? 34, 500 is the total depreciation that you can charge. And in relation to the second category, you have only one set, that is 3 lakh at 10% of 3 lakh. That will be 30,000. And can you help me, how much is the closing WDV? Here it will be 2 lakh 70. And what about in the other case, how much will be the closing WDV? 77,500 will be the closing WDV. I hope it is clear. This is how you have to compute the depreciation, by creating a block. Is this clear? All right. So please complete the answer. Building, plant and machinery, ship, furniture, intangible asset. GK, it is intangible asset, okay. Yeah, so let's move on, friends. Let's move on with the other theory. Listen. Next is additional depreciation. So once you understood normal depreciation, yeah. Okay. Okay. Because whether it is annual publication or not annual publication, rate is 40. So that doesn't make any difference whether a book is an annual publication or not. Okay. So 12 is other than annual, maybe accounting book. 1,000 rupees is income tax book. Doesn't make any difference. Rate is 40 only, whether it is annual or other than annual. Got it? Question once. Okay. This is the question. Answer. Okay. I'll show that answer again. Don't worry. This is the question and this is the answer. Yeah. So moving on to the next concept, that is said to be what? Additional depreciation. So let's understand how to compute additional depreciation. Listen. Additional depreciation on plant and machinery. So friends, listen. Shh. Keep quiet and listen. Everybody cannot claim the additional depreciation. Only assessee who is a manufacturer or engaged in the business of generation or transmission or distribution of power, who opted for WDV method, can claim additional depreciation. So only manufacturers and power generators. Power generators have an option to claim depreciation according to SLM as well. Okay, but if they opted for WDV only, they are eligible to claim additional depreciation. Are you with me? So only two types of persons can claim additional depreciation: manufacturers and power generators. Now, additional depreciation is allowed on any new plant and machinery acquired and installed by the assessee. So whatever new plant and machinery you have, on the value of the new plant and machinery, you can charge what? Additional depreciation. That also means you cannot claim additional depreciation on the value of other assets like building, intangibles, etc. For furniture, building, intangibles, etc., you cannot charge additional depreciation. Only for new plant and machinery, that too if you are either a manufacturer or a power generator, you can claim what? Additional depreciation. Moving on, additional depreciation can be claimed only in the first year of purchase of an asset. Unlike normal depreciation, you can charge additional depreciation only on the first year of purchase. Normal depreciation you can charge until that asset is completely depreciated. Yes or no? But additional depreciation is a kind of an accelerated depreciation that you can charge only on the first year of purchase of an asset. So, and what is the rate of additional depreciation? 20%. So the rate of additional depreciation is how much, friends? 20%. Now listen, let's summarize that. So unlike additional normal depreciation, you can charge additional depreciation only if you are either a manufacturer or a power generator. Point number 2, you can charge additional depreciation only on the value of eligible plant and machinery. Point number 3, you can charge additional depreciation at what rate? Fixed 20% rate. Point number 4, you can claim additional depreciation only on the first year of purchase. Is that clear till now? Is that clear till now? Now the point is, there are certain restrictions for certain assets. That means for the following assets, you cannot claim additional depreciation. Apart from this, for all other plant and machinery, you can claim what? Additional depreciation. You can claim additional depreciation on all plant and machinery except the following plant and machineries. Are you all listening? So let's understand which all are the plant and machineries where you cannot charge additional depreciation. Now we are about to discuss which all are the plant and machinery where you cannot charge what? Additional depreciation. What is number 1? Ships and aircraft. For the ships and aircraft, you cannot charge any additional depreciation. First of all, ship is not plant and machinery. Okay, but ship is not basically a plant and machinery, but for certain, in certain authors and certain books and all, ship is classified as a plant and machinery. Okay, so don't get confused. Normally for ship, it is not at all a plant and machinery, and hence you cannot claim additional depreciation. I clearly mentioned that. That's it. Okay. And now aircrafts. Aircrafts you cannot claim what? Additional depreciation. Yes. Ship doesn't come under the plant and machinery. Yes. Normally no. Ship is not a plant and machinery. Yeah. So moving on, for ships and aircrafts, you cannot claim any additional depreciation. Number 2, second hand plant and machinery, you cannot claim additional depreciation. You tell me, what is second hand plant and machinery? What do you mean by second hand plant and machinery? An asset which is already used, you are purchasing it again. If you are in that category, if you are purchasing that particular asset, you cannot claim additional depreciation. Moving on, office appliances or road transport vehicles. So if you have some office appliances or a road transport vehicle, again you cannot claim any additional depreciation. What is office appliance? What is office appliance? The assets that you normally use in your office. Whatever assets that you normally use in your office can be said to be office appliance. Are you all with me? So office appliance, you cannot claim any additional depreciation. And road transport vehicles also, you cannot claim any additional depreciation. What do you mean by road transport vehicles? Like your car, jeep, lorry, bus, etc. You cannot charge any additional depreciation. This is all right. All right. So listen. I'll fix it, don't worry. So listen, friends. Listen. Yeah. So listen. Where were we? Office appliance and road transport vehicle. So listen. The point is, say, for office appliances and road transport vehicle, you cannot charge any additional depreciation. And what is this office appliance? Whatever assets that you use in the office is said to be the office appliance. And what is this road transport vehicle? As I've told you, for your motor car, jeep, lorry, bus, etc., you cannot claim any additional depreciation even if it is a fresh asset. It comes under plant and machinery, but you cannot charge any additional depreciation. It's as simple as that. Are you all with me? Moving on to the next one, friends. What is next item? Any machinery or a plant installed in office premises, residential accommodation, or in a guest house. Say for example, a computer which is installed in office. You cannot claim additional depreciation. A computer installed in factory, you can definitely claim additional depreciation. You can claim additional depreciation if it is installed in factory. If it is installed in office or a residential accommodation, you cannot claim any additional depreciation. Are you with me? So all the assets which is installed in office premises, residential accommodation, or in any guest house, don't even think about claiming what? Additional depreciation. Are you all with me? Then next item, any machinery or a plant where the whole or part of the actual cost is already allowed as a deduction. Similar to scientific research asset, 35 AD asset, etc., that we will discuss today itself. Scientific research and 35 AD we will discuss today itself. So there are certain assets where 100% of the cost itself you can claim as a deduction in the year of purchase itself. So if you are having that kind of an asset, don't claim any additional depreciation because you already got 100% reduction. Are you all with me? So very simple. Which are the assets where you cannot claim additional depreciation? Repeat. Number 1, ships and aircraft. No additional depreciation. Number 2, second-hand plant and machinery. Don't claim any additional depreciation. Number 3, office appliances or road transport vehicles. Don't claim any additional depreciation. Number 4, any machinery or a plant installed in office premises, residential accommodation, or in a guest house. No additional depreciation. Then last one, any machinery or a plant where 100% of the cost is already allowed as a deduction also, you cannot claim any additional depreciation. Add depreciation, new plant and machinery more than 180, 20%. If it is less than 180, 10%. 10% carry forward next year. That is only for additional depreciation. Okay, Ragul. Admin office situated in manufacturing building. Okay, in this case, we can claim additional depreciation. Yes, manufacturing building means it is a factory. And all the cubicles inside the factory is definitely yes, you can claim. Give cab, that cab cannot claim additional depreciation. Office, give cab. No, never. If the office have a car, okay, that they cannot claim additional depreciation on that cab. No way, they cannot claim. They can claim normal depreciation, but not additional depreciation. Books inside the factory, no. Books is not at all an item which is used in factory. Okay, so no. Plant and machinery, yes. Like windmill, yes. 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 It's not necessary that it should be directly connected with the manufacturing. Indirect connection is also fine. It's a kind of a manual or something. Yes. Yes. Vehicle used in factory. I'm about to come. Okay, don't worry. Rig modes used in factory. Yes, you can claim. Now, moving on to the next one. Can you read note number 1 under this? Assessee can claim additional depreciation on trucks, dumpers, forklift truck, etc. used inside the factory exclusively. What is that? Say for example, there are certain factories where it is 25 acres, 50 acres and all. Inside the factory there will be what? Lorries and dumpers, which is used to transport the materials. Raw material from one place to another. Finished goods from one place to another. So, it will be like a 25 acre or 100 acre factories are there in India. Okay. It have a premise of around 100 acres and all will be there. So, it is impractical to walk through the premises. So, there will be vehicles like lorries, dumpers, truck, forklift truck, etc. Even though it is a road transport vehicle, you are not using it in the common public road. You are using it exclusively inside the factory. For those assets, you can claim what? Additional depreciation. Are you with me? we normally use the substance over form principle for checking whether an asset is eligible for additional depreciation. What exactly is the actual usage rather than what exactly is the form? That's how we claim additional depreciation. I hope it is clear. Now, for the purpose of additional depreciation, printing and publishing shall also be considered as manufacturing. For the purpose of additional depreciation, you have to consider the printing and manufacturing as well as additional, that also as a manufacturing process. Say, for example, my publisher, the person who publishes my book, he's a printing guy. He can definitely claim what? Additional depreciation on his printers and other assets inside his printing shop. Are you with me? Good. Now, hope you remember, if an asset is purchased and put to use for less than 180 days, you can claim only half the depreciation. Do you remember this? Likewise, in additional depreciation also, there is a restriction, and what they are saying is, if you are purchasing an asset and put to use that asset for less than 180 days, you can claim only half the rate of normal additional depreciation. So listen, 50% of additional depreciation to be allowed where plant and machinery is put to use for less than 180 days during the PY in which the asset is acquired. So whenever you are acquiring an asset and you are using that asset for your what purpose? For your manufacturing or factory purposes, then you can charge only how much? 50% of the additional depreciation only in that year. But imagine, you can claim additional depreciation only in year 1. But normal depreciation, you can claim it until that asset is fully depreciated. Yes or no? Yes or no? But additional depreciation can be claimed only in the year 1. So what department say? If you are purchasing an asset and put to use an asset for less than 180 days in the year, you can claim only half the rate of additional depreciation. Balance half you can claim in the next year. It's not a crime or it's not a violation that you are purchasing an asset and put to use for less than 180. So we cannot deny complete additional depreciation. So we are saying half claim in year 1 and the remaining half you claim in year 2. Are you with me? So the balance 50% of the additional depreciation shall be allowed in the immediately succeeding PY. So can you read this box again? 50% of additional depreciation to be allowed where the plant and machinery is put to use for less than 180 days during the PY in which such asset is acquired. And balance 50% of the additional depreciation shall be allowed in the immediately succeeding PY. So 50 in the year of purchase and the balance 50 in the subsequent year if it is additional depreciation. Yes. Yes, depreciation is a mandatory deduction. Explanation 5 to section 32 says depreciation is a mandatory deduction that you can claim irrespective of your profit or loss. Yeah. So moving on. How to understand the truck used in factory or running in road, or we want to assume that in the factory. They will say, in the exam they will say, in the factory okay. Additional depreciation allowed for vehicles like concentrate mixer truck, etc. Depends upon whether you are using inside the factory or outside the factory, okay. So in the next year we can show depreciation as 50% or separately as 40%. No. You compute 20%. Half year 1, the remaining half year 2. It is like that. Okay. You complete the entire 20 on the actual cost. Then half year 1 and the balance year 2. It is like that. Got it? Alright. So this is how you have to compute the additional depreciation, friends. Now listen. Now there is an important thing. Yeah, you can carry forward. You can carry forward unabsorbed depreciation to subsequent future years. Don't worry, we will cover that. Okay, wait. So listen. Now there is one important, and I can say it is a little bit confusing also. There is an important thing and a little bit confusing also is on its way. So I want all of you to be super attentive. Otherwise you will not understand this concept. Okay, listen. In accountancy, when you are selling an asset, you have an asset and you were using that asset for your business. Now you are selling that particular asset. Are you all listening? when you are selling that particular asset, how do you compute the profit? In accountancy, I'm talking about accountancy, not the income tax, okay? You check what is the book value. Rather than written down value, we use the word book value in accountancy. You check the book value and you check the sale value. If the sale value exceeds the book value of individual asset, the rest will be book profit. We will show it as a credit of the P&L account. Are you with me? Are you with me? When you compute book value in accountancy, till the date of sale, you can charge the depreciation and you can reduce that book value. Yes or no? You might have done many accounting entries and you might have prepared a lot of ledger accounts, P&L, balance sheet based on this theory. Is that clear? That is in accountancy and that is right also. But when it comes to income tax, it is not like that. Whenever there is a sale of an asset from a respective block, there are certain special treatments in Income Tax Act. Are you all with me? Whenever there is a sale of an asset from a respective block, then there are certain special treatments in Income Tax Act, and that's what we are about to discuss right now. Are you all listening? Let's understand what exactly are the special treatments whenever you are selling an asset from a respective block. For that, first of all, we have a chart. We have a detailed chart. This is actually capital gain. This is actually capital gain, but you have to study it as a part of 32 itself, otherwise you will not understand, okay? So, we have a detailed chart. So, for the time being, forget about the chart. Let me start with an example. Otherwise, if you simply read this chart, you will definitely get confused. So, forget about the chart. Let's stick on with an example. Okay, so listen. So, I am creating an example where I have plant and machinery A, B, and C. I have 3 plant and machineries. And the written down value of this plant and machinery is say 10 lakh. Written down value of this plant and machinery is 2023-24 is say how much? How much? So how many plant and machineries I have? How many plant and machineries I have? 3 plant and machineries. And what is the closing value of that block right now? 10 lakhs. The closing WDV of that block right now is how much? 10 lakhs. What is the individual value of A? We don't know. What is the individual value of B? We don't know. What is the individual value of C? We don't know, and we don't have to know also. When it comes to the income tax, we don't have to know because it's all about the block. Individual asset have no importance when it comes to the income tax law. Are you with me? So, A, B, C having a combined value of 10 lakh. Say situation 1. Situation 1. I sold plant and machinery A, say for, say 12 lakh. I sold plant and machinery A for what value? 12 lakh. Are you all with me? I sold one asset from that respective block for what value? 12 lakh. Say this 12 lakh is the net sale consideration. What is net sale consideration? Net sale consideration means what? Say in certain sales there will be brokerage or any direct expenses. So the gross value minus that direct expense. This is the net sale value is 12 lakh. Are you with me? When it comes to income tax, how do you compute the capital gain? That's what we are about to discuss right now. Yes, net of brokerage. That's right. How do you compute the capital gain if the situation is like this? First of all, you have to write the WDV value. Can you tell me how much is the WDV value of the block? 10 lakhs. WDV value of the block is how much? 10 lakh. There is no addition. There is no addition. So I am straight away deducting what? Sales. Hope you remember the format. With the opening WDV, always add additions first, then only consider deletions. In this example, since we don't have any addition, I'm not adding anything related to additions. So I'm straight away deleting the sales. How much is the sales value? How much is the sales value? Now you tell me how much is the remaining WDV value? Don't show negative 2 lakh. You have to show 0 because we don't have any remaining value in the block. So show what? 0. Then what to do with the 2 lakhs? That 2 lakhs shall be treated as deemed short-term capital gain. Deemed short-term capital gain under section 50. Are you with me? So the theory is whenever there is a sale from a respective block of asset, and if the sale value of an asset exceeds WDV value of the block, not WDV value of the asset. You need to check whether the sale value exceeds WDV value of that respective block. If yes, excess shall be always deemed to be short-term capital gain, irrespective of period of holding of that particular asset. Are you with me? Whenever there is a sale from a respective block and the sale value exceeds the WDV value, that excess value shall be deemed to be what value? Tell me, friends. Excess value shall be deemed to be short-term capital gain. It will be considered as a short-term capital gains. That's it. Under section 5050. Moving on to the next one. Example number 2. Example number 2. I sold the same plant and machinery A. I sold the same plant and machinery A, say for 6 lakhs. I've sold the same plant and machinery A for what value? 6 lakhs. Then what to do? First you write the opening WDV. How much is the opening WDV? 10 lakh. And how much is the sale value? 6 lakhs. And you tell me how much is the closing value of the block? After the sales, how much is the closing value? 4 lakhs. So we have a value this time. We have a value this time in the block. Now you tell me, is there any assets remaining in the block? Is there any assets remaining in the block? And how many assets are there in the block? We have B and C. We have B and C and we have value. So don't show any capital gain. Don't show any capital gain. Are you with me? Are you with me? So what we have to do in such scenario is, if the sale value of an asset does not exceed the block value, then don't show any capital gain, because there won't be any capital gain. Capital gain will come only if the sale value exceeds the total block value of that particular asset. Are you with me? Are you with me? Capital gain will come into the picture only if the sale value exceeds the total block value of the asset. Otherwise, you don't have to worry about the capital gain. So here, there won't be any capital gain, and you can charge what? Depreciation on that 4 lakh. You can charge depreciation, say, plant and machinery at 15% on that block value. And how much is 15% of that block value? Can you help me with the math? 60,000. And the closing WDV will be 3,40,000. This is how you have to deal. There is no short-term capital gain. This is situation number 2. Moving on to the situation number 3. Say, I've sold plant and machinery A plus B plus C for 7 lakh. I've sold everything on a combined value of how much? 7 lakh. I've sold A as well as B as well as C. And what is the total value? What is the total value? The total value is 7 lakh. Now let's understand, if I'm selling A, B and C all together for a total value of 7 lakh, how do you deal with that? How much is the WDV? How much is the WDV? 10 lakhs. The WDV of that particular asset is what? 10 lakhs. How much is the sales value? Sales value? 7 lakhs. Now you tell me, what is the remaining value in the block? You have remaining value 3 lakh. Are you with me? But you don't have assets in the block. No assets remaining in the block, because you have sold A as well as B as well as C. So what to do with this 3 lakh? You have to treat it as short-term capital loss under section 50. Are you with me? Are you with me? It's very simple, because you see, if we have some assets in the block, any assets in the block, you can charge what? Depreciation. But in this case, even though you have some value, you don't have any assets in the block, and hence you cannot charge any depreciation. I hope you got my point. Are you all with me? So section 50 is very simple. What is 50? if there is a sale from a block of asset, short-term capital gain will come into the picture only if the sale value exceeds the block value. Otherwise, there won't be any short-term capital gain. And you tell me when short-term capital loss will come. Short-term capital loss will come if there is value in the block but no assets. In that case, short-term capital loss will come into the picture. Is that clear? Now let's move on to the theory. We haven't discussed the theory. Now let's discuss the theory. Okay. Now, listen. So in the theory, can you read the first box? Asset is sold from a relevant block. And what is the first part? After sales, if assets remaining in the block, that means you sold some asset from a block. After sales, there are certain assets remaining in the block. If there are certain assets remaining in the block, then how do you consider that? You need to check whether the net sale consideration is more than the entire WDV of the block. You need to check whether the net sale consideration is more than the entire WDV of the block. That means the net sale consideration. That means the sales minus brokerage. If it is exceeding the entire WDV, if it is yes, then excess shall be deemed to be short-term capital gain. This was example number 1. Are you with me? What is point number 2? After sales, assets remaining in the block and net sale consideration is less than or equal to entire WDV of the block, then no short-term capital gain. If that does not exceed the WDV, then you don't have to compute any short-term capital gain. Claim depreciation on the balance value. If there is balance value, you can claim what? Depreciation. Now tell me, what if the sale value is exactly the block value? What if the sales value is exactly the WDV value? No gain, no depreciation. Everything is 0. You cannot claim, you don't have to show short-term capital gain and you cannot claim depreciation as well. Are you with me? Moving on. What is the second possibility? After sales, if no assets are remaining in the block, you don't have any assets in the block after the sales, then also you need to check whether the sale value exceeded the entire WDV value of the block. If yes, excess shall be short-term capital gain. That means plant and machinery A, B and C I sold for 15 lakh. Then what will happen? 5 lakh shall be short-term capital gain. And I cannot claim any depreciation on that respective block in future. Are you with me? Now, what is case number 2? Net sale consideration, if it is less than or equal to the entire WDV of the block, then no short-term capital gain. Hope you remember A, B and C, everything sold for 7 lakh. You have some value, but you don't have any assets. In that case, the balance value, if any, shall be the deemed short-term capital loss. I hope it is clear. Is that clear? Online. If cell B or C again, yes, you're right. Rafiq, you're right. Once you sold that and your block value becomes 0, thereafter when you sell B and C, the entire sale value become your short-term capital gain. Yes. I have a doubt in example 1, you said plant and machinery A is sold, but remaining B and C will still exist. Yes, B and C will be there. Terminal depreciation balancing charge is under SLM, which I am not planning to cover. Okay, VV. Terminal depreciation and balancing charge is under SLM, which is not that important, so I am not planning to cover that as a part of our revision classes. Yes, got it. So friends, it is under SLM, not WDV. So don't worry. Terminal depreciation and balancing charge is under SLM. Yep. So friends, let me make you solve a small exercise question so that you will get a better grip over this particular topic. Okay. So I want you guys to take this question number. This is actually from capital gain. No worries. You are capable of solving this. Yeah. So go through this question 8. It's a fantastic question. It's a highly conceptual question. Go through this question 8 and answer those 3 questions. It's a paragraph-based question. Okay. So read the paragraph, answer 1, 2 and 3. Ready with the answer? So, yes, I'm getting some answers. Last answer, 40,000. Okay. You need to compute the depreciation as well. Okay. You need to compute the, determine the claim of depreciation as well. That is also required. So shall we do it together? How many of you have an answer? Please raise your hands. Okay. At least you have read the question in full. You might have read the question in full at least. Yeah. So let's solve it together. Singhani and Co. Hope you understand, because being revision classes, I cannot give you more time for solving these kinds of questions, because if I give you more time, our total time will get limited. That's why I'm quickly going through the provisions. Okay. So Singhani and Co. a sole proprietorship owns 6 machines put in use for business in March 2023. The depreciation on these machines is charged at what rate? 15%. The written down value of these machines as on 1st April 2023 was 8,50,000. So what you need to do is, let's write down the opening WDV of that particular block. How much is the opening WDV of that particular block? Opening WDV of that particular block is 8,50,000. Yes, that is the opening WDV. Now, what is next? It is depreciable at 15%. 3 of the old machines were sold on 10th June 2023 for 11 lakh. And a second-hand plant and machinery was bought for 8,50,000 on November 2023. So you tell me, friends, how many assets they have initially? 6. They sold how many? 3. And they bought 1. A second-hand, not 2 plant and machinery, a second-hand plant and machinery. Are you with me? Are you with me? So we will write that 6 machines they have. We will always consider additions first. How much is the value of additions? That too less than 180 days. Why less than 180 days? Because it is on November. So can you tell me what is the value of the addition? 8,50,000. And can you tell me how much is opening plus addition? Opening plus addition, 17 lakh. And how much is the sale value? Sale value is 11 lakh. And how many assets that you have sold? 3. Now, as you know, how many assets you have in balance? You had 6, bought 1, 7, and sold 3. That means 4 assets you have, and you have value also. Why? Because the sale value is only 11 lakh, which is less than the 17 lakh mark. Are you with me? So how much is the remaining value of the block? 6 lakhs. So there is balance value, and you can charge what? Depreciation. But now there is a problem. What is the problem? If the 6 lakhs is the balance of opening, you can claim full depreciation. If that 6 lakhs is balance of addition, you can claim only 7.5% depreciation. Why? Because the addition is made less than 180 days. What to do in such scenario? What to do in such scenario? Follow FIFO. This is what departments say. Follow FIFO method. What is FIFO method? First in, first out. That means when you are selling it, first you have to utilize it from the opening, and the balance will be that of additions. And hence, what to do? The 6 lakhs is subjected to 7.5%. Why? Because FIFO means whenever you are selling an asset from a block, first you have to utilize it from the opening value of that particular block. If there is something balance, that balance will be obviously the balance of addition. That is FIFO. First in, first out. Opening is the first in. So when you sell, it have to be the first out. So tell me how much is 7.5 of 6 lakh? Come again? 45,000. And how much will be the closing WDV? 5,55,000. This is how you have to compute the answer. Are you all with me? This is option 1, not option. I mean, what is that? Part 1 or whatever it is. Okay. Part 1 of that particular question. Determine the claim of depreciation for assessment year 24-25. And what is number 2? Compute the capital gain liable to tax for assessment year 24-25. You have to compute the capital gain liable for taxes in the AY 24-25. How much is the capital gain liable for taxes? Nothing. Nil. Why? Why no capital gain? Because your sale value does not exceed the block value. Block means opening plus addition. Are you all with me? Block value means opening plus addition value. Your sales value does not exceed that, so don't worry about any capital gain. Now, what is next? If Singhania and Co. sold 3 machines in June 2023 for 21 lakh, will there be any difference in your above workings? Explain. If they are selling it for 21 lakhs, will there be any difference in the above working? Let's see. Opening will be the same, 8 lakh 50. Opening value will be the same, 8 lakh 50. And how about the addition? 8 lakh 50 only. Addition is also 8 lakh 50. And the total will be 17 lakh. If you are selling it for 21 lakh, then the closing WDV after the sales have to be written as nil. And how much is the excess? 4 lakhs excess shall be deemed to be what? Short-term capital gain under section 50. That 4 lakhs shall be deemed to be short-term capital gain under section 50. Are you all with me? Are you all with me? Excellent. This is how you have to compute the answer. So please make a note of the answer or take a picture or whatever it is. Additional depreciation, okay. Additional depreciation can claim only once at the time of purchase of machinery and put use on that year. Yes. FIFO means first in, first out. When you are selling something, you have to utilize the value from the openings first. The balance will be of addition. Yes, Ashwin. In that year itself, you have to depreciate. Okay. Ashwin, you have to depreciate. See, this is similar to example 1. This is similar to example 1. Ashwin, I hope you got my answer. Frequently not claim additional depreciation. I didn't get your question, Ragul, first of all. What is this? I didn't get your question. Yeah, you want the question? I'll show the question. Don't worry. This is the question, okay. Yeah, so moving on, friends, moving on. Shh. Keep quiet and listen. See, shh. Last explanation for FIFO. Don't ask me for more, okay? I'm explaining it for the 3rd time. Listen, what is FIFO? Opening have 8 lakh 50. Addition have 8 lakh 50. Total it is 17. Okay. Now, when you are selling 11, that means it is something is going out. That is what is called as sales. Out of 11, 8.5 will be utilized from the opening because you have to reduce the value. Yes or no? How much is 8.5 minus 11? How much is 8.5 minus 11? 2.5. So only 2.5 will be from the opening. These two together will be 11. So the remaining 6 after this sales will be on account of addition. This is what is called as FIFO. First comes in, will go out first. Yeah. Moving on to the next concept. Listen. Moving on to, yeah, I hope you got it, about 7.5. That is due to FIFO only, okay. Moving on to the next concept. Listen. Carry forward and set off of depreciation. Let's understand how to deal with carry forward and set off of depreciation. Say for example, listen, imagine a situation where you have purchased some assets. Keep quiet. You have purchased some assets, but you are not able to make any sales. No sales. You have purchased some assets and kept everything ready, but you are not able to make any sales. Once you purchase the asset, then you can charge claiming depreciation. Are you with me? Say the value of asset you have purchased is 10 lakh and the rate of depreciation is at 15%. So what to do? 1,50,000 will be the depreciation. But the problem is you don't have any income to charge off this depreciation. Because your sales is how much? 0. You don't have any income to charge off this depreciation. So you tell me what to do. If you don't have any income to charge of this depreciation, then department say this depreciation have to be carried forward as it is by calling it as unabsorbed depreciation. Unabsorbed depreciation. Are you with me? Under section 32 subsection 2, this depreciation that is not absorbed with the income have to be treated as unabsorbed depreciation, and you have to carry forward it to the next year. And what to do if you carry forward it to the next year? You can adjust with the next year's profit. You can adjust that particular amount, carry forward with the next year's profit. Are you all with me? Are you all with me? Now the question is, how many years can you carry forward this? Unlimited, or we can say indefinite period. There is no restriction for the number of years that you can carry forward. It is not like a normal business loss. A normal business loss can be carried forward only for 8 years. But unabsorbed depreciation you can carry forward for how many years? Unlimited or indefinite subsequent years. Are you with me? Say you have depreciation, you don't have any sale. So that amount of depreciation, you cannot charge it from the income because you don't have any income. So that 1,50,000 you can carry forward it to the unlimited subsequent year. And this concept is said to be what, friends? Unabsorbed depreciation. And you can carry forward unabsorbed depreciation to how many years? Unlimited or indefinite subsequent years. Both are same. But in the next year, if you have profits, then definitely adjust it, okay? Everybody will adjust it, set it off. Why? If you have profit next year, you have to pay the taxes. If you set it off, you are absolved from the liability of taxes. Are you all with me? Are you all with me? Very good. So this is how you have to compute the unabsorbed depreciation. Explain calculation of unabsorbed depreciation once again. My God. Unabsorbed depreciation means you have depreciation, you have no income. Okay. Carry forward that because you cannot charge the depreciation if you don't have income. So carry forward that depreciation to the subsequent year. That's it. Moving on. Moving on to the next one. Next is section 35, that is expenditure on scientific research. So listen, we will study this in a table format. Listen, scientific research. Are you all listening? Are you all listening? This have a considerable importance nowadays because this have something to do with the BAC as well. 115 BAC also have something to do with section 35. So this have a considerable importance. This might have a considerable importance in your upcoming examination, September 24. Yes. Let's see. Listen. Scientific research, you can divide that scientific research into two. Okay. Scientific research into two means in-house scientific research expenses into two. First of all, what is in-house scientific research? In-house scientific research. You have a research and development department by your own. You are maintaining one. Are you with me? You want to create some technology so that you are maintaining one for yourself. Are you all with me? Say you have a research and development wing by your own. You are maintaining it for what? Not 8 years. That is for, if you keep like this, I don't think that we will be able to finish everything. Okay. You are sticking on to the same point. I've explained that. Only for normal business loss, it is 8 years. Not for unabsorbed depreciation. Okay. You don't, if you have profit 2,50,000, depreciation 3 lakh. So unabsorbed depreciation will be 50,000, carry forward of next 8 years. They Ragul. I've told you unabsorbed depreciation, unlimited, indefinite. How many times I've repeated? You guys are not listening. That 50,000 you can carry forward it to indefinite period. Oh, Huma was saying not 8 years in infinite. Yes, Huma, you are right. Ragul, I've told this again and again and again. Oh my God. Yeah. Understand. All right. So, where were we? In scientific research expenditure, in-house scientific research expenditure, you can divide that in-house scientific research expenditure into two. Number one, revenue nature, and number two, capital nature. Say you have a scientific research department by your own. Okay, you want to create or innovate or invent something, so that you have a R&D for your own. Inside that R&D, the expenses that you're incurring can be divided into two: revenue nature and capital nature. Can you give me some examples for the revenue nature? Can you give me some examples for the revenue nature scientific research expenses? Salary to scientist, then electricity charges, then purchase of raw materials or components, we can say electricity, yes, then rental expenses, then all other miscellaneous expenses will come. Are you with me? Can you give me an example for a capital nature expenditure for R&D? Purchase of equipments, then purchase of the building, then purchase of patent for something, yes, then purchase of know-how, all the intangibles. Otherwise you will say know-how, patent, goodwill, everything will come. All the intangibles. These are the examples for capital nature expenditure in in-house scientific research. So revenue nature is there, capital nature is there. This revenue nature can be divided into two, that is pre-commencement and post-commencement. Revenue nature can be divided into two. What is that? Pre-commencement and post-commencement. What is pre-commencement? What is pre-commencement? Let me give you an example for pre-commencement. Say listen. Say listen. Here. What's your name? Anish. Harish. Say Harish. He is about to launch a new mobile phone company. Okay. Harish is about to launch a new mobile phone company. And what about your name? Next one. Rajkumar. Say Raj is the close friend of Harish. Raj and Harish are both very close friends. So Harish is about to start a new company, that is a mobile phone company, H phone, like iPhone. He started a company called H phone, Harish phone. So instead of Apple logo, it's Harish's photo. Okay, it's Harish's photo. It's there as the logo, and the cost is around 1 lakh. The cost for one phone, they say it's a flagship phone. They say it's what? Flagship phone, and the cost is 1 lakh rupees. H phone Ultra Pro Max. Okay, now the cost is 1 lakh. And there is nothing special in that particular phone. There is nothing special in that particular phone. Rajkumar, you tell me, you have 1 lakh rupees and you are planning to buy a phone. Will you buy H phone? No. Why? There is nothing. Why should I buy H phone? This will be the question. Okay. What do you say? Nanpana irundalu. When it comes to the financial matters, definitely we will think. Are you with me? Are you with me? Even Uir Nanpan will not buy what? That particular phone by paying 1 lakh rupees. Are you with me? Yes. Then you tell me, how can you make it more attractive for the customer? If you have something special, we can say core competencies. You might have studied core competencies in your SM. That's the unique advantage that you have in your business. If you have that core competency, especially when it comes to the tech and all, you should have something which is not offered by your competitors. Then you might be able to sell it for rupees 1 lakh. Yes or no? Say, H phone have an inbuilt drone. It have an inbuilt drone. You press a button, it will automatically go up, take a selfie and come back. Okay, it's free to attract customers. Okay, if you give phone for free, then you will die and your customers will come and take everything. Okay, so free is only for Ambanis and Adanis. Yeah, that free concept, yes, it will work. It will work. Nowadays, the industry is actually driven on free. I think this session is also free. Yeah, all right. So, it's actually run on free. Okay, so the point is, forget about free. Think about this, what was I saying? H phone. Yeah, think about H phone. See, when it comes to H phone, first of all, before launching the phone itself, he should be ready with the technology. Yes or no? Before launching the phone itself, he should be ready with the technology. At the launch, he should say that my phone have a inbuilt what? Drone, which no other phone company in India or overseas have. So you buy this, click a button, it will go to the sky, click a picture and it will come back. Don't buy drones. Okay, this is the offer given by H phone. Then people will come and buy H phone. Yes or no? For saying that, he should start his R&D first, even before commencing the business. Are you with me? So there can be pre-commencement revenue nature in-house scientific research expenses and pre-commencement capital nature in-house scientific research expenses. But there is a problem. What is the problem? He have an R&D, he haven't started his business. If he haven't started his business, you cannot claim that expenditure under PGBP. For claiming an expenditure under PGBP, you should have what? Business. Something similar to what we have discussed yesterday in house property. Pre-commencement interest expense. You have interest, but you don't have house property. Likewise, you have scientific research expense, but you don't have a business. So what to do? Don't worry. You accumulate everything and claim it as a reduction when you start your business. You accumulate everything and claim it as a reduction, not in 5 equal installment. Okay, that is under house property. Here what they say is, don't worry, you accumulate everything and you charge it as a reduction under PGBP under section 35 when you actually start your business. Are you with me? Are you with me? So we are about to discuss that particular thing, that is pre-commencement revenue nature scientific research expense. Now next question is, can you claim all the revenue nature pre-commencement expenditures as a deduction while you start your business? The answer is no. There are certain restrictions. That's what we are about to discuss. So listen, what is the first point? Payment of salary to research personnel and purchase of material incurred within 3 years immediately preceding the commencement of business is allowed as deduction in that year, or we can say deduction in the year of commencement. What does that mean? Only 2 types of expenditure that you incur before you start your business is allowed as a deduction. Which all are the 2 types? Number 1, payment of salary to research personnel. That means scientist salary. Number 2, purchase of raw material. These 2 are the revenue allowable items. Other power and fuel and other thing you have to ignore. Only purchase of raw material and payment of salary to research personnel are allowed as a deduction, which is incurred in the pre-commencement era. That too, that have to be incurred within 3 years immediately preceding your date of commencement of business. Are you with me? Are you with me? For example, you commenced your business on 1st April 2023. Then all the expenditure that you incurred from which date? 21, 22, 23. Say from 1st April 2021 till 31st or till 1st April 2023. This is the 3-year gap. Yes or no? 22, 23, not 3 year. It should be 20. Yeah, 21, 22, 23. This is the 3-year gap. 21, 22, 23. During these 3 years, all the salary that you are paying to your scientist, as well as purchase of raw materials that you are doing in this 3-year phase is allowed as a deduction in which year? In the year of commencement, then only you will have that PGBP. If you have PGBP only, you can claim it as a reduction under section 35. Is that point clear? So you can claim all the expenditure that you incurred within this 3-year period, that too in relation to the payment of salary as well as purchase of raw material in the year of commencement under section 35. I hope that point is clear. Are you with me? Are you with me? Then raw material, yeah. Free to attract more. Sir, Geo give free network for 1 year to catch the market. It's claimed in section 35. No, it's not scientific research and all. It's free. What is that? Free. You cannot claim that. Okay. Yes. But they have started their business. Okay. They are not charging. That is, they started their business. They can claim it as their normal business expenditure. Okay. They've started their business. They have provided everything for free, I think for 1 year or 2 years or something. 1.5 years or something, they've provided everything for free. That means we have start doing something. That is the commencement of business. Okay. So, coming back to the point, friends, revenue nature. How about post-commencement? What is post? What is post? From the date of commencement and afterwards. So, in that case, any revenue expenditure incurred on scientific research would be allowed as a deduction in which it is incurred. If you are incurring a Post-commencement scientific research expenditure, all types of expenditure that are incurring in the post period is allowed as a deduction in that respective year. All means that includes salary, purchase of raw material, power, fuel, whatever it is you are incurring in relation to that R&D is allowed as a deduction under section 35. Are you all with me? So, listen. The revenue nature, you have to split that into two, pre-commencement phase and post-commencement phase. In pre-commencement phase, only salary as well as one more thing. Salary as well as purchase of raw materials is allowed as a reduction. That too incurred within 3 years immediately preceding the commencement of business is allowed as a deduction. How about post? All the revenue nature, scientific research expenses allowed as a reduction in the post phase. Is that clear? Is that clear? Super. Now moving on to the capital nature expenditure. You tell me what is capital nature? Like purchase of land, purchase of building, purchase of plant and machinery, whatever it is called as capital nature scientific research expenditure. Again, that also can be splitted into two. What are the two splits we have? Pre and post. So in the pre phase, can you read the table under the pre-commencement period? What is that? The aggregate of expenditure so incurred within 3 years immediately preceding the commencement of business is allowed as a deduction in the year of commencement. There is a greatest advantage for you. See, what is the normal treatment for a capital expenditure? What is the normal treatment for a capital expenditure? What do you do with a capital expenditure normally? Capitalize and charge depreciation. Yes or no? Yes or no? But if you are incurring a capital expenditure for your scientific research asset, don't worry about depreciation. Rather, instead of capitalizing it and claim depreciation, you charge that entire cost as an expenditure under section 35. Are you with me? You claim that entire thing as an expenditure under section 35. Forget about claiming depreciation. We are giving you a wonderful offer. If your profit is if you still have a profit after claiming all the capital expenditure, you pay the taxes. That's what the department say, because the department want to promote all the scientific researches happening in India. Are you with me? Are you with me? And what they are saying, aggregate of, read that along with me, aggregate of expenditure so incurred within 3 years immediately preceding the commencement of business is allowed as deduction in the year of commencement. Aggregate of expenditure so incurred within 3 years immediately preceding. There is no restriction for any expenditure. They are saying whatever capital nature expenditure that you have incurred 3 years immediately preceding the commencement is allowed as a deduction in the year of commencement. Under which section? Under which section? 35. How about post? Can you read that? Any expenditure on scientific research carried on by the assessee would be deductible in full in that respective year. So any expenditure of capital nature on scientific research related to the business carried on by the assessee would be deductible in full in that respective year. Means in the post era, whatever the expenditure which are in nature of capital is allowed as a deduction in full under 35 in that respective year itself. Are you all with me? Are you all with me? Whatever expenditure that you are incurring in the post era which is related to your capital nature is fully allowable as a deduction in that respective year. Respective year means what? In the year in which you incur the expenditure. Are you with me? Now. Capital expenditure means expenditure including land. Yes or no? But will you get any deduction for the expenditure incurred on land? No. So there is a note, and can you read the note? Expenditure on land disallowed. Whether it's pre or post, you are not supposed to claim any expenditure that you have incurred on land as a deduction, not allowable. Whether it is pre-phase or post-phase, don't worry. Whatever the expenditure that you're incurring on land is never allowed as a deduction. Why department is not giving any deduction for the land? Whether it is depreciation or whether it is 35, they are not giving any deduction for the land. Why? Land will be land only. whether you do some capital, scientific research, or whether you should do some business, land will be there only. The value will only appreciate. Are you with me? Say KS Academy is running academy in this land. Will the value of the land go down? That depends upon you. Okay, that depends upon you people. Normally it won't go down. Are you with me? Are you with me? Super. No, normally it will go up only. Because whenever there is an academy starting, what will happen? That area, more students will come. Okay, if more students are coming, then what will happen? As the shops, bakery, everything will be, they will be ready, like cafe, bakery, hotels, everything will be ready. Because lunch, students normally don't travel to home. Every student normally don't travel to home. There are classic examples in Kerala for this. Small places, academy started with a branch. Then the very opposite to that, there will be one hotel. There will be one hotel they will start. And that hotel, maybe the hotel are expecting only students. And they give special discounts for the students also. This happens in Kerala. They give special discounts to the student. It's like that. If you show an ID card of that particular institution, you will get a discount. So the students are like that every time they go to that particular hotel only. But what happens if that all of a sudden the academy changes the place? Hotel also is forced to change the place. Yes, it is like that. So, coming back to the point, note number 2. Can you read note number 2? Salary, if paid before the commencement of business, shall specifically excludes perquisites. It's quite a huge blow. What is that? See, in the pre-commencement era, we have discussed salary. Yes or no? What do you mean by salary? Basic salary, DNS allowance, commission, brokerage, whatever it is paid by the employer to the employee, excluding perquisite. Because whenever, for claiming deduction, that employer is not supposed to claim perquisite given as a deduction. If it is a pre-commencement salary, that is for your scientist or your supporting staff. What if post-commencement period? Can you claim deduction for the perquisite? For the employer, the perquisite provided to the employee is a cost. Yes or no? If it is a cost, then he should be allowed it with a deduction. If it is a perquisite provided to your scientist, that too before the commencement of business, then you cannot claim any deduction under 35. If it is a perquisite, we call him. Yeah. If it is a perquisite paid after the commencement of business, then what's the speciality? Then you can claim deduction. You can obviously claim deduction. Are you all with me? So, this is how you have to claim deduction for the perquisite thing. Are you all with me? Moving on to the next one. Can you read note number 3? Read that. Carry forward of deficiency. That is capital expenditure incurred on scientific research which cannot be absorbed by the business profits of relevant previous year can be carried forward for indefinite period. Imagine when you charge your capital nature expenditure all of a sudden to your profits, what will happen? You will not have that much profits, especially in the first year and all. You will not have that much profit to absorb all your capital nature expenditures. Yes or no? Are you all listening? Especially when you start your business, your first year sales will be comparatively less because you are actually a baby to the market. Are you with me? Maybe in 2-3 years you will gain, you will pick up. So, especially in the first years and all, will you have that much amount of profits to, to wipe out your complete capital expenditure or to charge off your complete capital expenditure? No. So, what to do with that unabsorbed capital nature scientific research expense? Department say, if you have any unabsorbed capital nature scientific research expenditure, you carry forward it to the future. How many years you can carry forward? How many years you can carry forward? Unlimited or indefinite subsequent year you can carry forward. Are you with me? It's something similar to our unabsorbed depreciation. This also can be carried forward to the unlimited subsequent years. Now let me ask you one doubt. What if you have some unabsorbed revenue nature scientific research expense? What if you have some unabsorbed revenue nature scientific research expense? You treat it as your normal business loss only. And ultimately what will happen? The carry forward will be limited to subsequent 8 years only. Are you with me? If it is a normal business, yeah, both for post and pre. Yes, Ashwin, it's both for post and pre. Yes. So if you have any revenue nature, unabsorbed expenditure, then that will be treated as a normal business loss only, and it can be carried forward to 8 years only according to section 72 of income tax. Set off and carry forward. Are you with me? Are you with me? In income tax, don't skip any chapters, okay? You have to study everything because, do you remember the first day I've created a chart? Because everything is every chapter I can bring in one question. Okay, I can bring every chapter in one question. It is easily possible. It's quite easy to create a question where there is adjustment from every chapter, and institute will do that. They are doing it. They will do that also. Are you with me? So don't skip any chapters in income tax. Don't skip any chapters. Yes. Now, so this is how you have to deal with that. Now, can you read note number 4? Once you claim the deduction under section 35, don't come and ask for depreciation. Why? You claimed everything as a deduction. Now you want more depreciation, huh? Maximum 100% reduction. We have already given you 100% reduction. Thereafter, you cannot charge any depreciation. Are you all with me? Now, yes. Capital expenditure both pre and post? Yes, yes. If it is pre or if it is post, if it is capital nature and cannot be absorbed, you can carry forward. Yes. Break I'll give you. Okay, let me complete section 35. I'll give you break after that, okay? We have a few more things under section 35. That's it. So, section 35 have a second phase. The first phase was in-house scientific research expenditure. And we have a second phase. And what is that second phase? Amount contributed or paid to outside agencies. What do you mean by amount contributed or paid to outside agencies? You are given some donations, not outsourcing. You have given some donations to some approved entities. Are you with me? Maybe in future you may have a benefit due to that donation. Maybe in future you may have a benefit. You may or may not have. Are you with me? So you are giving some donations to certain approved entities. That amount donated is allowed as a reduction under section 35. Say for example, Indian government wants to promote the scientific research and all. So you are donating something to an approved scientific research association in India, then it's a good thing because that association will get some fund. They will make use of that fund to create some technology, and as a country we will move on. Are you with me? US and all is actually totally updated and totally tech related, but most of the Indians are in US. They are really creating the tech. Yes, most of the techie company only they are making use of mostly Indians. I'm not saying only Indians, mostly Indians. That is a problem of not Indians. They are not getting a job opportunity, or they are not getting a salary over here. So they are going outside. We cannot complain. We cannot say that those people who are going out of India does not have any national sentiments and all. Rather than sentiments, certain people prefer better lifestyle. That is a person's choice. So it's not, we can simply post something in Instagram and social media. It's very easy to post something in Instagram and social media. Take the mobile phone and write whatever you feel like. Okay, but it's actually very difficult. When you step onto a person's shoes, he might be having certain financial commitments. That's why he is fleeing or going out of India. So we cannot complain that. If that opportunity is here, then I'm sure that that person will not, majority of them, may prefer to stay back in India itself. Yes or no? That we don't know, but we are assuming that yes. Okay, whatever it is. So coming back to the point, amount contributed or paid to outside agencies. You are donating something to an outside agency. Then can you claim deduction? The answer is yes. There are 4 types of donations which can be claimed as a deduction. What is item number 1? Section 35 subsection 1 clause number 2. Can you read that paragraph along with me? Some contributed to notified approved research association, college, university or other institution carrying scientific research. And how much is the reduction? 100% of such contribution is allowed as deduction. 1 second. If unabsorbed revenue expenditure is treated as business loss, means it can carry forward only for 8 years. Yes. Pre-commencement perks are claimed as deduction in other head. No, you cannot claim. Get a deduction in 35 and another deduction claimed a deduction in chapter 6. No, because chapter 6A deductions, chapter 6 means you meant chapter 6A, right? No, chapter 6A items are different. Like charitable institutions, etc. is covered under chapter 6A. Not 35 items. 35 items are not over there in chapter 6A. Yeah. So for one expenditure, one deduction only. You cannot parallelly claim another chapter 6A deduction. Okay. Yeah. So moving on to the first one, friends. What is the first one? Any contribution to an approved either a research association or a college, university or other institution which does what? Scientific research. Whatever you donated, whatever amount that you donate, you can claim that entire amount as a deduction. Are you all listening? Or are you all thinking about the break time? Don't even think about it, okay? Only think about what? Results. Only think about results so that you will get some energy to move on. Right now, I am feeling like I am having exams. I want you to desperately sit so that I will learn everything. And I will clear my exams. I'm feeling like that. Is it like that? Okay. Yeah, I'm feeling like I'm having exam. Oh, I'm getting tensed. I'm getting tensed of completing the topic. And you guys are, come on, sir. It is Italy. Let's go for a break and chill, yaar. All right. All right. So coming back to the point, friends. Listen. See, the first one is very simple. Research association, college, university or other institution or which does scientific research. And how much is the reduction? Whatever you donate, 100% you can claim as a deduction. And what is the second one? Can you read the second one? You are donating to a approved Indian company for scientific research. How much is the reduction? 100% of such contribution. You are contributing something to an Indian company which has an approval and which does approved scientific research. You can claim that entire donated amount as a deduction. And what is next? Some contributed to approved notified research association, college, university or other institution carrying on research in social science or statistical research. What does that mean? You are donating something to a notified research association or a college, university or other institution which does what? Research in social science or they are doing some statistical researches. Then again you will get a deduction of how much? The amount that you donated is allowed as a deduction. And finally you are donating to a national laboratory or a university or an Indian Institute of Technology or to a specified person for carrying out approved programs of scientific nature or scientific research. Then how much is the reduction? 100% is the reduction. Are you with me? Are you with me? You are donating something to national laboratory, university or IIT or any other specified person for certain approved programs. That donation is also allowed as a deduction. And how much is the reduction? 100% is the deduction. Are you all with me? Now, there is a thing. Imagine at the time of donating the amount, they had the approval. Soon after your donation, they lost the approval. Okay, say for example, today I donated something to a research association and today they had an approval. Next week they lost the approval due to some non-compliances or violations. Now you tell me, can I claim deduction for my donation? Can I claim deduction for my donation? Yes. The only one thing that you have to check, at the time of donation, if they had approval, you can claim the deduction. They have tested this once in exam. And I'm sure that some of the students might have written, in the year end, they don't have donation. Okay, sorry, they don't have approval. So, not allowable as deduction. That's wrong. At the time of donation, You need to check whether they have approval. If yes, they can claim it as a deduction. Otherwise, not. Are you with me? Don't write it. That is the note. Don't write. That is the note given over there. Okay. All the important things have been given in the revision note itself. So these are the things under section 35. Now let's quickly solve one small question. Okay. One small question to make it more clear. And I'll give you a break after that. Okay. Small question it is. Come again. Yeah. So one small question. Let's solve and let's go for a break after that. Okay. So where is that small question? This is the one. It's nothing. So can you read question number 7 and tell me the answer? It's very simple it is. Perks are taxable on both scientist and employer. For the scientist, it is taxable and not deductible for the employer. Yes. Yes, Huma. For the scientist, perk will be anyways a part of his taxable salary. For the company, it cannot be claimed as a deduction as well. That's the treatment, Huma. When you write answers in exam, always put separators, okay? Always put separators. What is separator? My God. Day. The 7,50,000 par. After 7, there is a comma. After 50, there is a comma. That's separator. அது போடணும் இல்லைன்னா ரிசல்ட் வரும்போது அதுக்கு வேறொரு வெர்ஷன் இருக்கு, அதை நான் சொல்ல விரும்பல. ஓகே, அது ஆயிடும். Hello. Yes. So let's solve it quickly and let's go for a break, okay? So listen, it's a very simple thing, okay? It's a simple thing, so let's not waste time. Mr. A furnishes the following particulars for previous year 23-24. Compute the deduction allowable under section 35 for assessment year 24-25 while computing his income under the head PGBP. He has exercised the option of shifting out of default tax regime provided under section 115 BAC 1A. So he's not opting for BAC. So let's see. Number 1, amount paid to notified approved Indian Institute of Science Bangalore for scientific research. What to do? What to do? 100% deductible. Are you with me? Then what is next? Amount paid to IIT Delhi for approved scientific research program. 100% deductible. Third one. Amount paid to X Limited, a company registered in India, which has its main object scientific research and development as is approved by the prescribed authority. 100% deductible. Next one. Expenditure incurred on in-house research and development facility as approved by the prescribed authority. So these are in-houses. Number 1. Revenue expenditure on scientific research. So 100% deductible because they already said that while computing his income under PGBP, so they already have started the business. So it is not pre, it is post only. So entire 3 lakh you can claim as a reduction. Capital expenditure including cost of land 5 on scientific research, 7,50,000. What to do? Cost of land you cannot claim. So deduct that 5 lakh from that, and how much will be the remaining? 2,50,000. So altogether, if you add these things, it will be 1, 2, 3, 4, 5. If you add these 5 things, it will be 13 lakhs. And that is the amount that you can claim as a reduction under section 35. Is that point clear? And in exam, it is always better to write the section numbers, but subsections and clauses, it's not necessary that you have to remember and write. But if you should remember the main section number, 35 at least you should remember. Are you all with me? Yes. So go relax and come back at 11:05, okay? 11:15, no, முடியாது 20 minutes தான். Go relax and come back at 11:05.